Ever wondered how traders on Solana are automating their way to high yields without constantly babysitting their positions? Or how they're maximizing profits with minimal effort? Today, we're uncovering one of Solana's most powerful DeFi tools, Kamino Finance, that does all the heavy lifting for you. Welcome back to All Things Solana, your guide to exploring the most important projects and tools within the Solana blockchain ecosystem. My name is Danilo, and if you're new to the channel, make sure to hit that subscribe button and ring the bell so you never miss an update on how to navigate the crypto space like a pro. In today's video, we're diving into Kamino Finance, an automated liquidity management protocol that makes earning yield as simple as a few clicks. We'll walk through Kamino's key features, like its auto-compounding vault and how it leverages Solana's low transaction costs for better performance. Whether you're new to crypto or looking to step up your yield farming game, this video is for you. So what exactly is Kamino Finance? It's a protocol built on Solana that makes providing liquidity effortless. If you're new to DeFi, providing liquidity just means putting your crypto into a pool so others can trade with it. In return, you earn fees. Kamino automates the hard parts. Normally, you'd have to constantly adjust where your crypto is placed in that pool to get the best returns. But Kamino does this for you. Think of it as a self-driving car for your crypto investments. It even reinvests your earnings automatically, so your returns can grow over time. And here's why people trust it. Kamino currently manages over $2 billion in assets and is one of the biggest earners in Solana DeFi. Users are seeing big boosts in their earnings thanks to Kamino's strategy of concentrated liquidity, where it focuses your investment on the most profitable price ranges. Plus, Kamino's beginner-friendly interface lets you set it and forget it, so you don't need to be an expert to start earning. Before we dive in, make sure you have a Solana wallet like Phantom with some SOL in it to cover transaction fees. If you haven't set up a wallet yet, check out my previous video on how to set up Phantom. It's linked in the description below. You'll need this to interact with Kamino and start earning. Let's jump in. Let's first talk about borrowing and lending. Kamino's borrow lend system is perfect for users looking to access liquidity without selling their existing assets. Think of it like using your crypto's collateral to unlock value without having to give it up. Here's how it works. You deposit assets like Solana, USDC, or other supported tokens into Kamino's lending markets. These assets act as your collateral, and you can borrow against them to invest in other opportunities. Maybe you want to leverage another crypto investment, or simply need funds without selling your existing tokens. You can do that with Kamino. This overcollateralization feature might seem complicated, but it's really just a safety net. For example, if you deposit $1,000 worth of Solana, Kamino might let you borrow $700 worth of USDC. This cushion ensures that if the value of your Solana drops, you won't lose all your funds to liquidation. Kamino even integrates partial liquidation mechanics, meaning that if the market turns against you, only a portion of your assets will be sold off to repay the debt, reducing your risk of losing everything. And for lenders, this system works in reverse. If you choose to lend your assets, you can earn interest based on the demand for borrowing in the market. Kamino offers multiple lending markets, including its main market, which features large cap tokens, and the JLP market, which focuses on more niche assets. You can even participate in the altcoin market for potentially higher yields, although this comes with more volatility, or in the Athena market if synthetic dollars are your thing. All in all, Kamino's borrow lend function provides a safe, flexible way to grow your assets without needing deep technical knowledge. Then we have liquidity providing. Kamino's liquidity vaults are the gateway to earning passive income while contributing to the decentralized finance ecosystem. But what does providing liquidity actually mean? In simple terms, when you provide liquidity, you're allowing others to trade assets like SOL or USDC. In return, you earn a share of the fees generated by those trades. Traditional liquidity pools can be hard to manage because you need to track market movements and rebalance your position to avoid losing potential earnings. Kamino solves this problem by automating the entire process. Its concentrated liquidity management ensures that your assets are deployed within the most profitable price ranges. This way, your liquidity is focused where trading is happening the most, maximizing the fees you can earn. One of the key advantages of Kamino's system is auto rebalancing. As the market shifts, Kamino automatically moves your assets to the most optimal price ranges, so you don't need to worry about constantly monitoring and adjusting your positions. This makes it ideal for beginners who want to get into liquidity provision without dealing with the complexities of traditional DeFi strategies. Moreover, all the fees you earn are auto-compounded, meaning they are reinvested back into the vault, growing your position and boosting your returns over time. What makes Kamino even more powerful is its K tokens. When you deposit liquidity into a vault, you receive K tokens, which represent your share of the pool. These tokens aren't just placeholders, they're yield-bearing assets that can be used as collateral for borrowing in Kamino's other DeFi features. This means you can earn yield in multiple ways, all from the same set of assets. Let's talk about Multiply. Kamino's Multiply Vault is designed for users who want to increase their exposure to certain assets by leveraging their holdings. Leverage, in simple terms, means borrowing against what you already have to gain even more market exposure. This can significantly boost your returns if the market moves in your favor, but it also comes with higher risk. Here's a more practical example. Let's say you deposit 100 Solana into the JitoSol Solana Multiply Vault. Using leverage, you can borrow additional Solana and loop this process, essentially using the borrowed Solana to buy more Jito Solana. This gives you exposure to a much larger amount of SOL without having to own it. With Kamino, you can achieve up to 5x leverage depending on the vault and the asset you're using. However, there are risks involved, especially when borrowing at high leverage. If the interest rate on the borrowed asset exceeds the staking yield, or if the price of the asset drops significantly, you could face liquidation. Kamino has integrated advanced liquidation mechanisms to minimize the impact on users. Rather than losing your entire position, Kamino performs partial liquidations to repay the debt while maintaining the rest of your position. For users looking to maximize their yields, Multiply offers a powerful tool. While it's more suited for users with a higher risk tolerance, Kamino's interface and risk management systems make it accessible even for beginners who want to experiment with leverage on their assets. The platform also offers detailed analytics to help you track the health of your position in real time. Next, we have long and short. Kamino's long-short feature allows users to take advantage of market volatility by betting on whether the price of an asset will rise or fall. What makes this feature stand out is its simplicity. While traditional shorting or leveraging might seem complicated, Kamino's long-short system is designed to make the process intuitive and beginner-friendly. Let's start with longing. If you believe the price of Solana is going to rise, you can take a long position by buying more Solana with borrowed funds, which gives you greater exposure. When the price goes up, your profits are magnified thanks to the leverage provided by Kamino. On the other hand, if you believe the price of Solana is going to drop, you can take a short position, essentially borrowing Solana to sell at the current price, then buying it back later when the price drops. Kamino's long-short vaults offer leverage ranging from 1.8 to 6.7x, depending on the asset and the vault that you choose. This leverage allows you to maximize your profits, but it's important to manage your risk carefully, as leveraged positions can also lead to larger losses if the market moves against you. Kamino's built-in risk management tools help mitigate this by automatically rebalancing your positions and offering partial liquidation if needed. For new users, Kamino's easy-to-use interface guides you through the process, making it approachable even if you've never shorted an asset before. And because Kamino operates on Solana, transactions are fast and cheap, which is a huge benefit compared to other DeFi platforms that can suffer from high fees and slow processing times. Let's summarize the journey under Portfolio. The Portfolio tab is your personalized hub for managing all your positions and assets within Kamino. Think of it as your control center, where you can easily monitor everything you've invested or borrowed across the platform. Whether you're involved in liquidity provision, leveraging positions, or borrowing, the Portfolio tab provides you with an intuitive overview, showing your current holdings, your risks, and performance metrics. For beginners, this feature is incredibly useful because it simplifies the complex task of tracking multiple assets. Let's break it down. You can see the total value of your assets, both borrowed and supplied, as well as the health of your positions. This means that if you're borrowing USDC against your Solana, or providing liquidity in a JitoSol Solana pool, it's all visible in one place. More importantly, if any of your positions are nearing a liquidation threshold, the Portfolio tab will show that, allowing you to take action before any losses occur. Kamino also makes it easy to adjust your positions directly from the portfolio. If you see that your collateral is at risk of liquidation, you can quickly add more collateral to avoid it. Alternatively, you can repay loans or withdraw liquidity if needed. For example, if the market turns bearish and your Solana position becomes risky, you can reduce the exposure with just a few clicks. This dynamic approach allows users to manage risk in real time, ensuring that your investments stay safe. Additionally, the Portfolio tab provides historical data, so you can review how your positions have performed over time. Whether you're using the multiply vaults, providing liquidity, or managing long-short positions, the detailed analytics help you assess what's working and what needs adjustment. Beginners will appreciate this feature as it turns complex DeFi strategies into easy-to-understand visuals. You don't need to be an expert to know whether your portfolio is doing well. The data is presented in a clear and concise manner. And last but certainly not least, we have the native token. The Kamino token is the native token of Kamino Finance, and it plays a vital role in the ecosystem. Launched in April 2024, Kamino serves several purposes, from governance to staking and liquidity provisioning. Let's break it down piece by piece, starting with staking. When you stake Kamino, you earn Kamino points, which increase your overall rewards on the platform. The more you stake, the more points you earn, and these points can be used to boost your yield in other Kamino activities, such as liquidity provision or borrowing. This staking model is particularly appealing to long-term users who want to maximize their passive income without actively managing their positions. Beyond staking, governance is another key feature of the Kamino token. As a token holder, you have voting rights within the Kamino ecosystem. Governance decisions might include adjustments to protocol parameters, launching new vaults, or deciding how to distribute rewards. This means that by holding and staking Kamino, you're not just a passive participant. You can actually influence the direction of the protocol. Governance tokens give the community a say in major decisions, which can also increase the value of the token itself if good decisions are made. Kamino also plays an important role in liquidity provisioning. By holding Kamino, users can provide liquidity to specific pairs on the platform and earn additional rewards. These liquidity rewards are designed to incentivize users to help maintain deep liquidity pools, which is critical for the overall health of the Kamino ecosystem. The more liquidity you provide, the more Kamino you can earn, which creates a compounding effect on your holdings. One of the most attractive features of Kamino is its utility in the Kamino points system. Users who actively participate in the ecosystem, whether it's through staking, through liquidity provision, or other activities, can earn points that boost their rewards. The points you earn can also qualify you for future airdrops, offering even more potential value. For beginners, this means that holding Kamino isn't just about passive rewards, it's about actively engaging with the platform and reaping the benefits over time. Finally, let's look at the future potential of the Kamino token. With Kamino Finance managing billions of dollars in total value locked and a growing user base, the token could see an increased demand as more users flock to the platform. The Kamino token acts as the fuel for Kamino's entire ecosystem, and as the platform scales, so does the utility and value of the token. For long-term holders, this makes Kamino an attractive asset to hold and participate in. To wrap it up, Kamino Finance is transforming DeFi in Solana by simplifying liquidity management, leveraging assets, and maximizing your returns through automation. With powerful features like concentrated liquidity, auto compounding, and intuitive long-short strategies, it stands out as a platform for anyone looking to optimize their assets without constant monitoring. In this video, we've explored what Kamino Finance is and how its standout features make DeFi more accessible and efficient. Now, the real question is, how will you use Kamino to level up your DeFi strategy? I'd love to hear your thoughts. Are there any Solana projects or DeFi tools you want me to cover? Drop your suggestions in the comments below. I always appreciate hearing from you. And if this video brought you value, don't forget to give it a thumbs up, share it with your community, and subscribe for more deep dives into crypto and DeFi. Thanks for watching, and I'll see you in the next one.